Mr. Chairman. Thank you all to our witnesses. Robust conversation and important. So barely a day passes, particularly being on this committee, where we don't hear from banks large and small about the compliance burdens that they're forced to navigate. And they do stem from Dodd-Frank. It's a common subject. Dodd-Frank created the FSOC, the CFPB, entities that operate with really little accountability, really by design, leaving banks unsure on how to comply. Not bright green lines, very, very subjective, ideological lines. So consumer fraud and scams are surging, yet the very agencies tasked with protecting consumers seem more focused on writing new rules and literally engaged in drive-by random investigations. That's why we are trying to roll back some unnecessary regulations and why this is critical. And so financial institutions can focus on customers, providing capital, and growing the economy. So, Mrs. Johnson, Dodd-Frank promised stronger consumer protection, but banks consistently raise concerns about rising fraud and scams and heavy compliance. So 15 years later, has the law improved consumer safety or bank performance?
So I think overall, the banking system is very resilient. I think they are very conservative in terms of, making sure that they can lend to consumers and that consumers are able to repay. I think more generally, one of the concerns that we have is the complexity and the redundancy of so much regulation into things that oftentimes are not really where the risk is. SVB was brought up earlier, and I think that those were pretty obvious errors of omission from the management on that case. And so we want to make sure that bank regulators are focused where real risk exists, like interest rate and credit risk. And then also outside of the banking system, right, where more lending is going because of all the regulatory burden that banks and costs that banks have, including smaller banks, pushing lending out to the banking system. So just having a much more wholesome view.
Thanks. And I like when you brought up before, you'd like to see things as based upon facts and data-driven, your term, and your three pillars: follow the law, follow the law. That's a one that should be a given, right? Review impacts, real impacts, and respond to those properly as you do in business, as you do in life, and focus on real consumer fraud. And that just doesn't seem to be happening. So, in your view, what is the biggest factor driving the rise in scams that we see today?
So this is an area where we have called on the CFPB to fulfill its mission, its statutory mission, and one of its core principles to educate consumers. Look, I mean, with the proliferation of technology and digital banking and social media and text messaging, consumers are being bombarded with opportunities to fall victim to handing their own money. Oftentimes it's through, a Facebook link that says there's a designer puppy and click here and pay me, and suddenly, you've paid someone who's a complete fraudster. It's very, very difficult for a consumer to determine whether or not that person on the other end is a scammer. Banks have spent, and I said this earlier today, billions every single year. They spend millions of man hours. We have a fraud committee within CBA that is extremely robust. I can tell you details of how much banks do to combat fraud and scams. But we need the government to step in and to recognize that often this is state-sponsored, that this is originating outside of the banking system. We need telecom to step in. We need law enforcement to also step up. We appreciate Congressman Nunn and Congressman Gottheimer and others who have co-sponsored the GUARD Act. We think that's a really meaningful step forward.
All right, good, thanks. There's a big difference. Mr. Keller brought up a little while ago, appropriately regulated. That's a big difference from excessively regulated. And seeing that only 19% of small businesses say they have adequate access to capital, I think we can really go from good to great. And that should be a goal. So, Mr. Kubiak, real quick, like a short time. The Council of U.S. Financial Regulators relies heavily on the Office of Financial Research for data analysis. What agencies like FSOC depend on their own internal research shops? Doesn't that risk creating an echo chamber?
I'm sorry, I didn't hear the last bit. I mean, you're out
Does
of
that
time.
create an echo chamber? I'm out of time, so maybe we could talk about it later. Thank you very much. I yield back, Mr. Chairman.